Session, ladies and gentlemen, real estate is a gate-heavy industry, and money is always a need for our industry and making that paradigm shift in raising money. We will now commence our next session, which is a masterclass on overseas listing. And for that, I would like to invite our panelists. Our first panelist, can we please have you on stage, Mr. Gaurav Verma, Managing Director of Hutton. Round of applause, yes, of course, let's keep the cheering going on. Mr. Alex Walker, co-founder and CEO of Odyssey Group. Round of applause, please. Mr. Kapil Singh, founder and managing partner of Kapital Global. And Mr. Jesus Hoyos, managing partner, ARC Group, our group. Thank you very much. Once again, the session we will be having here right now is Masterclass on overseas listing. Before we go into that, I do see a lot of people, as you can see, they're still coming into the group. Okay, I know you can hate me later. Ladies and gentlemen, let's try something. Some of you need to wake up, all right, for this session. So can we please have our right hand up? This is something my grandfather taught me. Let's have your right hand up. Yeah, great. Let's have your left hand up. Together, yes. Good. Now give me all your money. I'm joking, all right. I'm joking. So let's start by cheering. Let's clap. Let's get the energy going. Let's wake up. Come on. Sir, you're not clapping. Come on, bring it up. Thank you very much. All right, great. I know this session is going to be great as well because, of course, this is an absolute masterclass in overseas listing. So, and we have our amazing panelists here. So, whenever you're ready, sir. Thank you very much. Please take it away.
Yeah. Hi guys. Is it too loud? Hi guys. My name is Chittransh, and I know it's evening time. You guys have taken a lot of information over the day. But this panel is a little interesting. I mean, we've been seeing the panels largely on real estate, India, but what we've been trying to do is, we've tried to bring the best service providers who could help you find overseas solution. There's an echo. Yeah. So, the panel here talks about what can be done in overseas market, how you could tap into overseas market, the structuring, the products. So I have with me Jesus, who is managing director for our Mexico office. We have Kapil, who runs these SPV and structured products. We have Alex, who runs the Odyssey Group. It's a fund management company based out of Singapore. We have Gaurav from Hutton. So, I mean, I'll just sit down and probably ask these guys for an introduction. Yeah, start.
Hi everyone. First of all, thanks CREDAI team for inviting us to the conference. And again, pleasure meeting everyone here, and thanks for listening to the session here. Quick background on myself. This is Gaurav Verma. I'm a managing director at Hutton. I spearhead all the TMT coverage efforts along with the D-SPAC. I've been doing banking for about 50 plus years. Was at BFA Merrill Lynch and Nomura. So just broadly speaking about capital markets, I mean, US capital markets are very deep. There's ample amount of liquidity, whether it's public markets, private markets. So we'll love to get into a lot of the specifics. You know, we're very active on IPOs, M&As, all sorts of financing, both private and public. So we'll get into the specifics on the session here. Thanks everyone.
Over to you, Alex.
Thank you. Thank you again to the CREDAI team and all the wonderful partners that have joined and sponsored this event. So my name is Alex Walker. I'm originally from Sydney. I've been in finance and asset management industry for the past 24 years. My firm is based out of Singapore, Hong Kong, Japan and Australia. And we do a number of different things, investing, in real estate, private equity and alternative debt, predominantly across the Asia region. But we also have other solutions, including private wealth, so that assists with families looking at setting up family offices, typically in places like Singapore, which is quite popular with a lot of Indian families. But we also assist with fund and asset structuring, which also can be quite popular. So we work closely with the gentleman on this panel here. So in conjunction with our clients, setting up structures and assisting them with their wealth. Thank you again.
Yeah. Hi everybody, I'm Kapil. I head Capital Global. Capital Global primarily focuses on special situations globally with public markets in mind. We look at private investments and public equities. Primarily looking at companies that still be runway for 12 to 18 months before they become more attractive to the larger players. Work with our set of family offices. We do co-invest in transactions. We're working very closely with other analysts on the transactions and companies where we hold positions, as shareholders or as board members. And yeah, it's a very exciting space that we're operating in.
Hello everybody, I'm Jesus Hoyos. I am managing partner at Arc Group. Arc Group is a global financial service firm. We specialize in helping companies in developing economies raise capital through the capital markets, especially in the US. We work very closely with Gaurav and the Hutton team. We also do more traditional M&A, private debt and private market raises. Again, out of the global perspective, most of our firm and team members are headquartered in Asia, where Chittransh, the panelist moderator, is part of our India team. He's our head of India. So we're very happy to be here and very glad to meet everybody.
Yeah, so I think thank you for those introductions. But I would like to set up the context for this particular conversation. Here we are talking about largely that what would happen for companies which are based in India, how they can tap into the overseas markets, particularly US. And I would like Gaurav maybe to mention few products that are not IPO. People in India largely know what is an IPO, how it is done in the local markets. But what would happen in US markets, that would be interesting.
Yeah, happy to. So a couple of really popular products I would say since 2021 has been SPAC. So not sure how many people are familiar with SPACs, but the basic purpose of the SPAC is essentially a shell company to buy a target, which is an operating asset, and reverse merge into it and get listed on a US exchange, whether New York Stock Exchange or the NASDAQ. So there's been about 25 to 30 different SPACs focused on the real estate space to go out internationally, buy hotels, buy real estate tech assets, or other avenues that are touching the broader real estate sector. It's a great way to go public if the company has audits in place, good financials in place, and it's a much faster process because it's more of an M&A versus a regular way IPO, which takes several months to go through several SEC reviews. Here it's a much faster process. So we're on the EF Hutton side, we're number one globally on SPACs. We've done over 50 SPACs alongside our team here, raised over $6 billion in capital. We've announced over 12 different deals, so very active, but I would say besides the IPO, SPAC certainly is an asset class which is still very active, a lot of deals getting done, despite the IPO markets being shut down. So happy to provide some more context on SPAC. We'll be in the room here later too, but that's an avenue that we're seeing being used to go public for real estate companies.
Over to you, Jesus, particularly on the SPACs we've been discussing, and it's a long product, but largely for the smaller companies, what could be done in form of reverse mergers or OTC listings?
Yeah, so in general, the US markets have always been very welcoming to middle market companies worldwide. The good thing about the US in particular is that if you follow the exchange rules and you're compliant with the SEC, as Gaurav said, and you have your audits in place, the listing is a certainty, right? There is no ambiguity towards the process. We're very familiar with other exchanges globally, like a lot of our experience comes from Asian exchanges, particularly Hong Kong and China, right? And you have the rules and you have the unwritten. So on the rules, right, it's very similar to the US towards what are the minimum requirements for them to list. And then companies apply to list and maybe are in waiting list 5 to 7 years, and they never get listed. And why do they never get listed? Because they're not really the size that are palatable for their exchanges, which typically look at an IPO or any capital raise above $100 million. In the US, contrary to what many people think, is very welcoming to these smaller size, mid-market IPOs, right? In which you could go and do a direct IPO, which, as Gaurav said, right now in the current market is challenging because there is a lot of lower appetite for investors, but you have several different avenues, as we mentioned, SPACs. And we also have reverse takeovers, right? Which is a process of which there was a listed entity and the current operating business went bankrupt, right? But the owners of that business own that publicly listed real estate, let's call it, like that vehicle, right? And that vehicle does have some value, right? It has some liquidity, it already has investors. So it makes it very interesting for operating companies, especially in the smaller size, to come in and merge into those vehicles and then automatically become a public company that way. So we have seen especially a very large uptick in the last 6 months or so after some of the market cool down of these transactions going through and being very successful, and especially a lot of appetite from foreign private issuers, right, foreign companies globally, especially in Asia, to come into these vehicles, and then an investor interest to participate and invest alongside their local investors into these vehicles and raising the capitals that they need. So that takes us over reverse mergers, probably other vehicles that are a bit more traditional and real estate focused on REITs, right? That really real estate investment trusts that work very well in the US, and they follow similar rules everywhere around the world. So that also is a very active market that currently exists, and we're particularly closely with Hutton in doing several deals there. Maybe we have been working in the US, but this doesn't stop any international deal. It's still something that's palatable to investors, and from a regulatory standpoint, there is no restriction on it being either a domestic US company or a foreign company. So I believe that the US market just has a full catalog of possibilities and options for real estate companies to be able to list and be able to raise capital internationally.
So for what Jesus is saying, we've been trying to do in India also. We are right now working with a co-working space, doing a reverse merger, making it public. We are previously last year we did a transaction with Manipal, took their simple candle and air fragrance business public in US. You could see Renew Power. These are infrastructure-based businesses which have been raised capital, being public. So that's like was the one angle largely for the overseas listing and the capital markets. Then I would ask Alex to tell us a little bit on the products. It would take 5-10 minutes to explain on the product sides. Over to you, Alex.
Sure, thank you. So the guys are obviously talking about the listed markets, and obviously you're familiar with IPOs. SPACs obviously is another option. and real estate investment trusts, or REITs, as Jesus was talking about, as another listed vehicle. Where we also specialise is in non-listed. So there are the ability and structures to create your own funds or structures. There's also the ability to what we call institutionalise what you're doing. So many of you have heard today and yesterday that there is starting to get an increase with foreign capital looking at India. So that's institutions, that's larger external family offices, sovereign funds. And so what they're looking for is certain assets, certain portfolios. And so some developers may be interested in structuring products or portfolios that are attractive to those investors. And if you have an existing portfolio of assets or land, banking, whatever it might be, there could be the opportunity to structure that into an attractive acquisition, or as we heard in the last panel, potential joint ventures or joint venture partners that also could be interesting. So I think what we're seeing also from previous conversations and presentations, a lot of interest in India, and fund structures could be an option that you could consider. There are also other opportunities called AMCs, which are what you call actively managed certificates, which is also another way to structure or wrap around your existing assets to create a vehicle that you can then have external investor money. So ultimately, what are we referring to here? We're talking about ways to bring more capital to what you're doing as a business, or it could be a form of an exit of what you have already, or it could also be partnering up to bring additional capital to what you're doing in India. So it just really depends. Everybody's a little bit different. As the guys have mentioned, we are around today. I'll be here again tomorrow. So feel free to reach out to us and just ask us any questions. I believe our contact details are available through CREDAI, but of course, feel free to speak to us after this event as well.
Also, Alex, if you could talk about a little bit about your real estate hospitality fund, particularly what you're doing in a mature market like Japan.
Sure.
How do you see India on those perspectives?
So I started the firm back in 2016 in Hong Kong, and essentially we are investment professionals. So we look at many different sectors, opportunities. One of the sectors we identified 5 years ago was the Japanese hospitality sector. Why that's interesting is essentially Japan's economy relies very heavily on foreign tourism, not necessarily for the hospitality market, because 80% of the take-up is by domestic residents, but rather the tourism dollar that brings to Japan, to the general economy. And so the government is wanting to ramp up tourism from 40 million to 60 million tourists a year, and the reality is they just don't have the accommodation. And we specifically focus on what we call the boutique end of the boutique hospitality market in Japan, which is for us 150 keys or less. And essentially we identify existing brownfield hotels. We acquire those ideally at an opportunistic or distressed price. We then optimize those assets either through a full renovation or light renovation, just depending on what's involved. It could also be adding additional rooms. We work with hospitality groups that want to get into Japan. We have relationships with the like of Banyan Tree, Swiss Bell Hotels, for example. And therefore they bring their international teams, marketing and expertise to operate that asset. And over a 2 or 3 year, we get some normalized earnings, and then we look to exit the actual asset. So not a complicated strategy, but essentially that's where we see a bit of a sweet spot in the Japanese hospitality market. And we were able to get 15%, typically between 15 and 20% IRRs, 8% yields. We're borrowing debt at about 1.5% interest rate. And it's hard to find those sorts of numbers in most markets. So that's why we started 5 years ago. We had set up, there's 4 things we do in Japan. One is we have funds. So we set up a Cayman fund, we bring in investors into that fund, and then we invest in Japan. Second thing is we have institutions that, for whatever reason, don't invest in the funds, because sometimes their mandate doesn't allow them to do that. And so essentially we do separately managed accounts, which is basically typically 100 million US plus. We agree a particular mandate, we identify assets, and we execute. The third thing is we do individual syndicate deals, so we find a particular individual deal, we structure that up and bring investors in on that deal. And the fourth thing is our advisory service. So that's where we're consulting to hospitality groups, other funds that are wanting to tap the particular sectors that we specialise in. So overall, we, as a group, while we're, I guess, finance people, we're also real estate people in that respect.
Interesting. Kapil, you have been working like a bridge between the people who are the, like Gaurav and Alex, who create complex financial products, to the people who are running companies by working with the founders, helping them prepare and get ready. So what has been your experience, a little bit on the case studies? That would be really helpful for the audience here.
So I think what we see in Singapore, I've been in Singapore nearly 2 years now, and obviously what most you're probably seeing with Hong Kong and China has been a little bit different than it has been in the past. And so Singapore is very much becoming more so that financial hub. It was always sort of a Hong Kong or Singapore competing, but it's obviously quite clear that Singapore's taking the lead of late. A lot of people from Hong Kong are moving to Singapore. Singapore as a country and the government is very, very proactive for wealthy individuals, family offices that want to set up offices. They have specific legislation around structuring family offices in Singapore. And they're very supportive behind families doing that. As part of that, there's also what they call the VCC, or Variable Capital Company structure, that they've recently set up. That is also very supportive with family offices that want to structuring their wealth and running their family offices domestically in Singapore. But what we're seeing is more and more institutions and external capital being very interested in India. China, I wouldn't say is maturing or not interesting, but obviously a very uncertain climate. And I'd like to think that, India, I've always observed that I think the world is becoming much more aware. And we just saw in the last presentation with regards to warehousing and data centers, there were some very interesting numbers there. And as I say, numbers tell the story. So I think from that perspective, we're seeing a lot more people interested in going into India. But then I think there's also the Indian entrepreneurs and business people we work with are looking for people like the people on this panel to try and help them navigate how to work with these organisations, how to negotiate with these organisations to find a mutual outcome. So while we are finance people, we're also entrepreneurs in our own right. So we're always looking for solutions and working on the client's case and finding the best solution that might work for them. And educating is a big part of that process, right? So partnering together, working together for a common outcome.
Over to you, Kapil, and the business.
Sure. We've been primarily working with companies that are cash flow positive or still a little away from being cash flow positive. We come in companies, we kind of structure, sit down with the management and structure long-term goals of the company, whether it's growth or exit. The promoters are looking at, and we introduce to them, the required capital, get the ecosystem, to our partners, Hutton, Odyssey, and look at, how we can, take the company to the next level, in case the company is looking for growth. And if in case the company is looking to exit, we try and, get them the right solution. So, there are a variety of ways in which we work with the companies. No company is the same, no structure is the same. So what I'm all of this, when it comes to a small company accessing the US markets, they kind of sound like some kind of rocket science. Because, traditionally Indian markets would have heard of, NSE, BSC. There is some distance to be covered. There's some hand-holding which is required. You've got to be a little organized, get the right kind of coordinates in place, and then, partners really kind of come in and help us, cross the milestones and get the company listed.
So, in terms of real estate, we see debt plays a very important role. So, Gaurav, if you could highlight some debt products that are available in US markets, which could be that, like people have heard of green loans, other parts, but there are a lot of products that are coming across.
You have here, and I'll keep it very basic. Let's take any business, data centers that we were just talking about in the panel before. It's a high growth business, stable business because it's hard assets that you can finance it against. There's a lot of different structures, and without getting into specifics on a lot of those, but there's asset-backed lending, which is based on the land they own, the equipment that's put on there. Then there is financing based on the growth trajectory, which is more of an equity story. So I've worked on several data center IPOs, some of the biggest ones in the world that went public on the US exchanges. And I think there's a lot of investor demand, even in US, for companies that are in India, that are in the data center space, because for all the reasons outlined in the session before, huge population, huge growth in data consumption, all those reasons, because the US market is saturated. It's hard to really build data centers in new regions, especially with the power consumption, the ESG push. So they move into Europe, and then Asia is going to be obviously a big focus area. So I would say like the data center is a perfect example where you have IPO as an option, you have asset-backed lending as an option. On the debt side, you have straight debt, which is a bank debt. There's a lot of obviously Indian banks that do that. There's a lot of US investors that are interested in that. And there's convertible features, which have both the debt side as well as the equity piece. So there's a lot of different, I would say real estate is one of those sectors which actually has a lot of different financing structures at its disposal because it is backed by hard assets.
Interesting. So Jesus, what's your viewpoint particularly on like India, as I've been working in the market, I know we have a tax issue in terms of going public overseas. There is a whole core structure. It requires a lot of complication. We have done those journeys few times now. So what's your experience on that part?
Yeah, so the truth of the matter is that although there has not been a lot of transactions, the fact that you already have companies from India, headquartered in India, that have listed into the US market makes a huge precedent, right? And specifically, we're talking about, and at least in the last few years, SPACs have been the main vehicle that have allowed this type of companies to list. I can talk specifically of a company called Jatra, which I believe is an online tour operator based in India, that they listed through a SPAC, I think 2013, 2014, was one of the pioneers. So the fact that even that early on in the vehicle, right, at that point where there wasn't really any institutional appetite in also a very challenging environment post the financial crisis, that they managed to get a listing and continue successfully as a listed company just proves to the market that Indian companies can, number one, go public, right? Even with all the regulatory scrutiny and the difficulties that you have around your tax system for you to be able to list overseas, even going to that hurdle, it made it worthwhile for both the founders and the investors to back such companies. And currently we're working with a transaction that is a three-way merger in which one of basically the main operating entity that brings in 60-70% of the revenues is an Indian-based company with linked to a very Manipal, yeah, so that will give us, at least for us, a bit more experience on the specifics and the particularities of India for them to go public. Especially in this case, like it's pretty much cleared already by the SEC. So we know that all of these are hurdles that can be managed. And we've had personal experience dealing with this type of issues. So I just want to say that it's possible. It's not easy, but it's definitely something that's worthwhile because you do have the institutional interest. And again, the good thing about the US markets is that once you're public, no one cares where you came from, right? You have that public currency that allows you to raise subsequent funds, right? You can do subsequent capital raises with the help of the likes of Hutton to secondary offerings, right? Especially a shelf offering, right? That would allow you to draw down money basically overnight from high net worth individuals, from funds. So that really opens up the financing possibilities for companies and especially international companies. That it's a market that is usually non-existent in their local economy.
No, I think we have seen earlier also, like Make My Trip, Renew Power. Those are the companies that opted for a SPAC, and Renew has been successfully been able to raise more than 1.4 billion now, including the latest one, just being public in the US, because it gives that depth. So coming to you, Gaurav, on the depth part, like, because you're typical Wall Street guy, so your experience on the depth of the Nasdaq or NYSE, and particularly how you can leverage that depth for the other part of the world companies like Asian companies, and for small companies like in India, $1 billion company is what we call as unicorn, is a big listing. But if you see in US, less than million is still a small cap. So how do you see that part navigating for that less than $1 billion companies listing?
I think there's a lot of questions there. So I think where we focus Fund is more in the mid-cap space. So it is sub-$1 billion. Majority of our deals are probably, I would say, 100 million to 500 million range. And we have about 30 different SPACs. Like I said, these are public shell companies looking for good targets to combine with. We're running out of good targets in the US, so we're actively looking at targets in Asia, India. I know we just closed a deal with a company in Britain, in Singapore. So in terms of companies that you guys work for that are private, or companies that you own personally, there's no size definition. We work on small deals as much as 50 million, 25 million, to as large as $1 billion deal we recently closed. So we have a lot of, I would say, SPAC entities that are looking for targets to go public, and Fund can help you guys raise financing for that. We can go through structuring, whether it's debt, equity, whatever is needed as part of that. We're very actively searching targets in Asia, and India is certainly a focus area.
Yeah. So I think that also clears that misconception that you have to be a big company for a listing process. It need not to be a big company. Like, it depends on what product are you choosing, how are you choosing, and the partners you definitely are working with. Over to you, Alex, particularly on the fund side. Like, how could Indian developers, real estate people, they can tap in overseas market? We have seen not many real estate funds professionalize in form like Blackstone's, and those are from the outside market. But developers taking that center stage is still not happening.
So typically in what we would describe, not really this offshore market, but the Asia Pacific market of fund structures, you typically got Cayman, and then also now Singapore with what they call the VCC structure, which basically Singapore. I don't want to say copy the Cayman structure, but reviewed it as part of their setting up the VCC. So typically for international investors, which could be institutions, sovereign funds, could be family offices, etc. Normally they'll invest in what you might call a feeder fund. And so that feeder fund would be, say, set up in Cayman or Singapore, and then that vehicle would, say, invest into India, into either a domestic or fund that may have been set up, and that vehicle will essentially hold the domestic real estate, land banking, what it might be. And so these sorts of investors look for these sorts of structures, and these structures have, auditors like KPMG, they have fund administrators that check all the numbers and make sure it's all done. So this is what we call institutionalizing a product. Because in order for this capital to invest, it requires these types of checks and balances. And you say, well, why would I want to operate that way, or why would I want to operate to attract this capital? Well, I think the reality is there's a lot of capital in the world looking for opportunities. And often these large pools of capital have certain requirements for them to be able to invest. Internally, in their, what they call investment mandates, it has to tick a long list of various things. So what we are familiar with is that long list, and we're familiar with the offshore structures. So I think like a developer is often looking for capital, whether it be as equity or debt, which has been discussed a little bit earlier this morning. And I think it's not purely about anymore looking domestically in India. I remember there was a gentleman this morning that quoted out of the 30-odd thousand CREDAI members, there's only like 900 that had access to domestic bank financing. So the question is, can you get offshore debt financing? Can you get offshore equity financing? And I think what we're starting to see, from what we see and also what we're hearing at the conference, there's a lot more of foreign investor or lender interest. But as I say, they're going to expect certain structures, certain things in place, checks and balances. But for those who are wanting to attract that capital, interested in that capital to expand what they're doing, their vertical, their sector, whatever it might be, that's something that we can help with. So essentially, we say funds, but it could be different types of vehicles. It could be a special purpose vehicle, it could be a company, some sort of vehicle that helps that offshore capital to be collected and then fed into India and then deployed accordingly.
Interesting. So I would just, because I live in Deep India now, so it's like, and working with a lot of entrepreneurs there, the struggle and challenges is also I wanted to highlight, because people see overseas listing as an attractive opportunity sometimes, but when they go deep dive, they understand it, there are a lot of hurdles around this. Few of them being the audit process, which is that you need to be a PCB audit to be an US listed company. Then there is the share issue, a big issue in taxation. So that means that you have to have an overseas holding structure to ensure that you can be a public entity through that. But the good part about the US is the depth. You have Indian markets, but it could be as small as that. Let's say you have a rental business, you could just sell it to a REIT. It's as simple as that. You could have a company, you could merge with a listed entity in US, and you could become a listed company and then do tradings. And US particularly, it's not about always selling the shares, buying the shares. There are a lot of products and nuanced products around that. I think that's where the depth and the beauty comes from the market. Over to you, the panelists, if you want to add some last comments.
I just wanted to add a comment a little bit earlier on reference that this is not India's next decade, this is the next century. I'm sure everybody in this room knows, but if you look at the past 500 years, if you look at super cycles as economies, right, from Europe to Holland, through the UK, US, and essentially we're now moving from the US over to Asia, primarily in China, but India is still very much akin to that, very important part of that cycle. So I guess what we see is we have experience in the developed markets like the US and things of that nature, Europe and things. But essentially we've been in Asia a long time and we're starting to see that shift, the purpose of what's happening with India. this institutionalization, this international capital seeking a home. So it's not really a matter of, is there capital out there? Yes, there is. It's just a matter of attracting that capital to the right opportunity. So that's why we took the opportunity to be here and travel down to have a chat. I think there's a lot of very smart panelists here. I would take the opportunity, not just this panel, but a lot of the other people who've spoken as well. I think they're all very happy to share their knowledge. And I think what I appreciate here is everybody has a very great philosophy and attitude of sharing and building each other up and working together, which I think is very refreshing. It's traditionally in business, as we know, everybody's thinking everybody is a competitor. But I think the new paradigm is that, if you can work together and achieve together, achieve common outcomes, you achieve more together. That's actually in our name, Odyssey. That's why I chose it. Basically, the view of going on a journey together. So that's just want to leave that last point. And again, we're happy to speak to anybody. Obviously, every case is different. So essentially, any case or anybody that chats with us, we're going to share with the panel and discuss what's the best solution for that person. We don't have one particular product, one solution to sell, so to speak, or push. Essentially, our business is based on achieving the right outcome for the client. So I wanted to also stress that.
So people compare China and India, and I think that is where I want to end my panel here, is that you see 400 plus Chinese listings on Nasdaq and US, and from India we have 17, include 13 ADRs. So I think that is where the opportunity is, and I think with time this will grow, a big time. Over to you, CREDAI team.
Thank you so much, Chittransh. Sorry, before I could introduce you, you just jumped up in a hurry. So once again, let's give our moderator Chittransh a round of applause. Thank you very much. Alright, it's now time to have our felicitations. Can I please invite on stage Chairman CYW and CWW, Mr. Jagannath Bhandari, to felicitate Chittransh. Can we please have you on stage, sir? Can I also have Mr. Abhishek Bhatewara to felicitate Mr. Verma? And please have Mr. Nitish ready to felicitate Mr. Walker. And can I please have Mr. Hiren Parmar to felicitate Mr. Singh as well as Mr. Hoyos. Alright, slight change of plans. Can we have our very own Vinita Dalaji to felicitate Mr. Singh and Mr. Hoyos. Thank you very, very much for being a panelist.